It seems like these days the market really is waiting for just one piece of news, and that's Nvidia's earnings.
Literally.
And we got it.
Literally, we did get it. I remember last night before we left the office, you get those the market wrap emails from everyone that you sign up to, and it's like literally waiting for Nvidia, waiting for Nvidia, waiting for Nvidia. So Nvidia has reported overnight, and the numbers continue to astound.
Yeah. Let's not delay. Let's get straight into it. What's happening in the news?
News and markets.
So Nvidia did report last week, Ren, and the numbers continue to astound. $26 billion in Q1 revenue.
Yes. I think we need to give these numbers in the context of what they were last year as well.
Yeah.
Because the law of large numbers, 26 billion, you kind of lose all perspective. Here's the perspective. 26 billion in a quarter in 3 months this year compared to 7 billion last year.
Unbelievable.
Unbelievable.
Net income of $14.88 billion compared to $2 billion a year earlier.
Yeah. Just from 2 billion to almost $15 billion in profit in a year.
It's unbelievable.
Wild.
It's unbelievable. So the shares cracked $1,000. They have announced that they're going to do a 10-to-1 stock split, and the stock was up about 7% after hours.
Also an increased dividend as well. That always helps. So, yeah, look, a pretty phenomenal story. Nvidia is just riding this AI wave. It is the best picks and shovels play you're going to have for AI, because if you're building an AI data center, if you're doing anything with AI, you really need the H100 chips because they're best in class. Everyone's trying to catch up to them. AMD, a number of other chip makers are trying to catch up, but no one's close. The really interesting dynamic is their biggest customers are also trying to compete with them. I think Alphabet, Microsoft, Amazon, and Apple have all got varying degrees of projects to build their own chips. So it's this really interesting dynamic where the companies that are fueling all of Nvidia's growth are also trying to eat their lunch. Who knows how that plays out?
Yeah.
Well, I mean, the market seems to be big enough for everyone to eat at this point.
Yeah. So huge numbers coming through. We've now got to wait another quarter until, everyone holds their breath to see what the next quarter holds. They did provide guidance, which is, I think they said they're on track for about $28 billion in revenue for the next quarter. So we'll see how that pans out. In other news, last week, News Corp signed a $250 million deal with OpenAI for a contract of about 5 years.
Really undermining the New York Times lawsuit.
This is unbelievable, yeah. So essentially what it means is that News Corp are giving OpenAI chatbots or OpenAI access to their news archive, as well as any new material that they'll be releasing across their key mastheads to essentially train their chatbots.
Get ready for GPT-5, Denying Climate Change Edition.
Yeah, it's a bit,
Yeah. So for people who are unfamiliar, like the news world was sort of united in this. OpenAI has ripped us off and trained their AI models on our IP without giving us any revenue for it. And the New York Times is leading a lawsuit against OpenAI at the moment. And it seems like OpenAI are slowly going to start peeling off new news organizations and signing these deals with them. News Corp, they can always sniff a deal.
Yeah.
They got it from the big tech companies in Australia a few years ago. Now they're getting it from OpenAI.
It's just going to end up what we have with Google Search. Apparently part of this, OpenAI have agreed to include, obviously, News Corp articles and whatnot as the main source of information. If you're Googling, put them at the top of search results.
That ChatGPT doesn't give search results. It gives answers. That's the problem.
But now it can, you can find the sources.
Oh, like hyperlink out.
Yeah. And
okay.
so, it's in my eyes, this is a bit BS, but anyway, it is what it is.
What's BS?
You're not getting a true rip of what information is out there. You're getting a rip of what's been paid. Like they're analysing what's been paid to be there.
I guess so. I mean, cynically, I'm pretty sure OpenAI is still reading everything.
Yeah.
But I don't know, like last week or like 2 weeks ago, you were celebrating Reddit's deal with these guys.
From a Reddit shareholder point of view, I was. but,
Yeah. Why don't you celebrate this from a News Corp shareholder perspective?
Because I don't like News Corp.
And there we go. All right. Well,
Anyway.
before we get cancelled by the giant of Australian media, let's move on.
Yes.
Ozempic is these GLP-1 drugs just are making headlines around the world. Supply cannot keep up with demand. And we've seen a real trend of Australian pharmacies, pharmacies around the world, compounding like their own versions of it. The Australian government has just banned it. So like I think like the startups, like the healthcare players like Eucalyptus and stuff were probably the biggest players in that space. It'll be interesting to see what happens there.
They've banned compounding or banned compounding for the diabetes drugs?
No. Just for these
Yeah, for weight
GLP-1s.
loss,
Yeah. But we're also seeing over in the States more companies start compounding.
Yeah, so there's a company called Hims and Hers, which is essentially a generic drug manufacturer. They hit a 3-year high after announcing they now have a $199 weight loss alternative to Wegovy and Ozempic. Now, Wegovy goes for about $1,350 a month, so a significant drop in price. The stock's up 47%. The company is built off the back of essentially doing this. They reached almost $1 billion in sales by making a cheap generic version of Viagra. And they're now using that same playbook to hit up healthcare and weight loss. So it's interesting.
Yeah.
Stock's up almost 67% year to date. And obviously this is a response to the prices of these weight loss drugs at the moment. Slash demand.
Yeah. And then the final bit of news that we've got is around your biggest holding,
No.
Trump Media Corp.
Yes. Shares of Trump Media bombed last week because the company reported a net loss of $327 million off revenue of just $770,000. So that was for the first quarter.
So $770,000 a year in revenue or quarterly revenue?
Quarter.
Okay.
Yeah.
So what that's like a $2.8 million run rate.
Yeah, but remember when they listed, they said that their previous financial year was 4.2 million. So they're making less and less revenue as time goes on.
That's not good.
No.
But I was going to say, if that Trump Media gets a $8 billion valuation on 2.8 million in revenue, then Equity Mates Media.
Oh, here we go.
What are we getting?
Yeah, we should be up there. But anyway.
Did you follow
It's gonna go to zero.
You reckon it's going to go to zero?
Yeah.
Yeah, not before Trump sucks billions of dollars out of it.
Yeah.
But did you see the news with their auditing firm?
The auditing firm has been like a dodgy auditing firm to like 50 other companies
Yeah,
as well.
yeah. So the SEC has shut it down. BF Borges. And I don't think this was anything specific to Trump Media, but it was notable that Trump Media chose them as their auditor.
Yeah.
Essentially, this auditing firm got more and more and more publicly listed clients, but they weren't putting any more staff on. And that was like a red flag to the SEC to be like, hold on. And apparently, reportedly, allegedly, all of the Lees, they were just like, whatever the company said, they'd just sign off on it.
Yeah, the ultimate tick box.
Yeah. So now Trump Media has to find a new auditor.
Good luck.
As well as all these other companies have to find new auditors. Like, very short odds for me that all of those activist short sellers are sniffing. They've got this list of companies that had this auditor as their auditor, and they're looking at them pretty closely. But it would be interesting to see when these guys have to go to other auditors, if anyone's sort of caught with their pants down.
You wouldn't want to be associated with the guy. Anyway, that brings us to the end of news headlines. Plenty happening. Let's move on.